Welcome everyone. I'm Robert Green, CPA and CEO of Green Trader Tax and Green NFH. Welcome to this week's webinar, February 10th, 2015, on tax treatment for Forex and currency trading and deposit losses. Is it ordinary, capital, or 60/40 tax treatment? And is your money safe? Now, this is a Green Trader Tax webinar. You don't copy it or record it. We'll have a recording available. If you'd like to use our content at any time, contact us. If you'd like us to present to a group that you're affiliated with or a brokerage firm, let us know. So I'm the managing member of Green NFH, our CPA firm. My co-managing member is Darren Nischwander. I went through this PowerPoint with him earlier today. He added some good comments to it, and he's unable to join me today. I'm also the CEO of Green Trader Tax, which is the website and the content generator. So I'm the leading authority on Trader Tax, contribute to Forbes and Benzinger, wrote the tax guide for traders and the annual Trader Tax guides each year, wrote for Active Trader every year, but unfortunately the magazine just closed. Frequently interviewed in all the major media, New York Times, Wall Street Journal, Forbes, Barron's. Barron's thankfully recommends us every year. Teresa Carey said she was a big fan just a few weeks ago. You'll see us on the major networks, although not much lately with CNBC. And I'm the main tax speaker at the Money Show and the Traders Expo, which, by the way, comes up at the end of this month in New York City. So definitely come to my session to come say hello and meet me. And I've taught Trader Tax to other CPAs for CCH and state societies. Now, this is educational. That means that it's not one-on-one tax advice. We need to listen to your facts and circumstances and to then give you customized advice. This is not that. This is general educational information. And by the way, we never give investment advice. We're not investment advisors, just like brokers don't like to give tax advice. Now, trading Forex and currency is a high-risk activity. Now, I am going to take off the webcam now because I don't think we need it, and it's a little distractive. So I did take that off. Okay. So here's the overview. We're going to discuss tax treatment, regulation, money safety issues, and choice. You have options. You can trade Forex, you can trade futures, you can trade ETFs, you can trade Nadex. There's different tax treatment for what you trade. There's different regulations. It gets a little confusing when you consider all these things at one time because in each area, it's even confusing. Most people don't fully understand the rules for Forex. Now, Forex is different from futures. Forex interbank contracts are traded off exchange, and they're taxed differently from currency regulated futures contracts traded on exchanges. Now, if you trade on a U.S. futures exchange, that's a qualified board of trade, and it's Section 1256. You get those lower Section 1256 60/40 capital gains tax rates. That's great if you have gains. The tax rates can be 12% less. Now, Forex is the interbank market. You're trading spot or forwards. Most retail traders trade spot. Settles in less than 2 days. That's what all your manufacturers do too. It's a huge marketplace. The advertisers are right about that. They're a little deceptive about some other things, but they're right about that. It's huge. The whole world trades with each other, or most of it does, the world does, and they have to exchange currency all the time, and they go into the spot market to do it. So it's ordinary gain or loss because you can't give capital gains treatment to General Motors. It's part of their ordinary course of business. So ordinary gains are not as good as a long-term capital gain. Most traders have short-term capital gains taxed at ordinary rates. But ordinary losses, anytime you hear that, when it comes to the tax world, if you hear ordinary losses, that's a good thing. It's good if you want to deduct trading losses bypassing the capital loss limitation. Remember, $3,000 is the capital loss limitation against your other income. capital losses are deductible in full against capital gains. But after that's used up, if you want to write it off against your wages or other portfolio income, you're only allowed $3,000 a year, and you carry over the rest to the next year, where you can use it in full against capital gains. But again, the net loss is limited to $3,000. The really nice thing about Forex and the interbank market is you can take advantage of that ordinary loss treatment. Now, a lot of people who get started in Forex get started with small accounts and very large leverage. But if you have a big loss, for example, right now, after the Swiss National Bank surprise, if you got hit with a really big loss, maybe beyond your deposit, maybe they went after you for more margin, you'll appreciate that ordinary loss treatment. Let's go to the next screen. Now, the SNB shockwave. If you got caught on the wrong side of the Forex trade, and by the way, this is just the overview we're going through. If you got caught, a big surprise, the market's moved 19% in a flash. It's a huge policy change. People weren't expecting it. You may have incurred significant trading losses. Now, some were trading losses and others were impairments or losses of deposits. And that situation is confusing with some brokers. Now, Forex is all about leverage. It used to be you would go to an offshore broker and get 100 to 1, 200, 400 to 1 leverage. And there weren't big moves. So you needed that leverage to make money on small moves. Of course, with big moves and big leverage, at the snap of a finger, you can get wiped out or make a fortune. Turns out, with the government suing the Forex banks, the interbank market, the platforms, accusing them of market price manipulation and fraud and other practices, there's a lot of losses. And we've seen now, when the tide went out, some of these unsavory business practices in these models. So what is your loss? If you're sitting there with Saxo Bank and you had a stop loss order and they didn't respect it and they got you out of the trade at the worst possible moment, and a week later they changed the price to make it even much worse, so the bank had zero loss and you had the whole loss. Is that a trading loss? Is that a theft loss? Is that a deposit loss? Generally, let's say with MF Global, you knew you had your trading losses on one hand, and those were treated one way tax-wise, and you had your deposit losses on another. This is more confusing. So I'm going to explain how to handle the trading versus the deposit losses. Bottom line is you want to deduct your losses to get tax relief in the best way possible. You don't want to have to wait years for a sustained loss under Section 165 on a deposit loss. You don't want to get stuck with haircuts. You want great write-off treatment. And there's no one way that's the best. It depends on your tax file, what's good for you. It might be a capital loss, and maybe you have a capital loss limitation already, and you don't need any more capital losses. Now, there's a lot to cover. So we're talking about Forex trading, futures trading in currencies, ETF trading in currencies, NASDAQ trading in currencies. How is it all taxed? It's all taxed differently. Forex even has some elections, so that's the one issue. And then we're going to talk about regulation and money safety and other issues too. So again, this is the overview. Forex tax treatment is Section 988, ordinary gain or loss. You open up an account for $10,000 with a Forex broker in the interbank market. You lost that $10,000 with the SMB surprise. Maybe you lost more, but your broker's not going after you. Maybe your broker is going after you, and it's a $20,000 loss, or a $30,000, or a $40,000, or a $50,000. It's an ordinary loss. If you have wage income, or your spouse has wage income on a married filing joint return, you can write it off without a capital loss limitation. page 1 of the 1040. Now, we go into further details in Green's 2015 Trader Tax Guide, showing you exactly how to do the accounting, the rollover issues, and how to do the reporting. We're not going to cover everything today. We have a lot of content to get through. That's important as part of this big picture. So you can write off that $10,000, $20,000, $30,000 loss against your $100,000 wages and get huge refunds. Now, what if you have no other income? Well, you should have thought about making a contemporaneous internal election, what's known as a capital gains election. So you'll see later on, traders can make a contemporaneous internal election to use lower 60/40 1256G tax rates on major currencies. Now, if you made the capital gains election before incurring a large SNB related loss, so earlier this year, January 1st, you filed the internal capital gains election to get into the lower 60/40 tax rates. You didn't want ordinary gains rates. You wanted the lower rates. 60% is a long-term capital gain, 40% is short-term. When you do the math, it's 1/3 off the tax rates. You wanted that. You filed the election. Then you got this whopping loss with SNB news, headline risk. You're stuck with the capital loss limitation rather than the unlimited ordinary loss treatment. That's an internal election that you filed in your own books and records. And you know you did it, and you're an honest taxpayer, and you own up to it. So we'll talk about money safety issues. There are money safety issues for account holders with Forex brokers and ways to avoid this risk using other currency instruments to trade, choosing counterparties well, and reading account agreements closely. Regulators have your best interest at heart, so heed their advice and follow their rules. Risk with Forex brokers is confusing, and many react differently to the SNB shockwave. Some banks have put it all on you. Others have taken on more of the losses themselves to save their brands. Because bottom line, if there's 50-1 or 100-1 leverage and the markets move 19%, the music chairs stop and someone is without a chair. There are some huge losses. Someone's got to absorb it. And a lot of these Forex brokers are lightly regulated. There are segregation rules of a sort, but they're not heeded to as much as by the futures brokers. And there are capital requirements, but they're not that large. And if everybody gets hit with the same losses, that's why there were some failures. We're going to go through what protection and relief there is for you. Regulation and avoidance. Many American Forex traders disregarded CFTC rules for retail off-exchange Forex by trading with non-registered offshore brokers offering leverage far above CFTC limits of 50-1 on major currencies and 20-1 on minor currencies. They tried to get away with it. We said don't do it. We said be careful with the Forex brokers. We've talked about all these issues. It's all come home to roost. This is a live lesson in leverage and light regulation and navigating around regulators' advice, which was intended to protect you. So several offshore brokers and a few U.S.-based Forex brokers are facing financial strain or insolvency as a result of offering excess leverage to their customers during the SNB shockwave. We're going to discuss it all. All right. First section of today's presentation. That was just the overview. Forex and currency tax treatment. When it comes to taxes, Forex traders can have the best of both worlds, ordinary loss treatment and lower 60/40 tax rates on gains. You got to make that election, and then you got to stick to it. So, Forex is different from currency futures. Forex refers to the foreign exchange market where participants trade currencies, including spot, forwards, or over-the-counter option contracts off exchange. Forex differs from trading currency RFCs, regulated futures contracts, on futures exchanges. Like other RFCs on U.S. futures exchanges, they're 1256 contracts reported on Form 6781, and you get the lower 60/40 capital gains tax treatment. That's a wonderful thing. And you also can do a 1256 loss carryback election. If you made that election to opt out into 1256G on major currencies, and the Swiss is a major, and you have a $100,000 loss with 1256G treatment, 2015. The guy who stayed in 988 has ordinary loss treatment. You have capital loss treatment. Are you in trouble? Are you really disenfranchised now? Not necessarily. There's a 1256 loss carryback election where you carry back your 1256G losses in 2015. You carry back that 100,000 to the prior 3 years, but only applied against Section 1256 gains. But if you've been trading all these years and you had big gains last year, you're good to go. You're going to get relief. Now, spot versus forwards. Now, we're just talking taxes now. Most online trading platforms and brokers only offer Forex spot contracts. These contracts clear within 2 days, whereas Forex forward contracts clear in over 2 days. Most online retail traders don't have access to forwards. Those are for the big players in the interbank market. So if a trader wants to stay in a spot trade longer than 2 days, and many do, the broker offers a rollover trade, which technically is a realized sale and purchase of a new position. So it's not like you just roll it over and defer the taxable transaction. You have a taxable transaction, a sale and a buy. And most brokers don't treat it that way, and you need to treat it that way come year end. If they just punt the cost basis to the next position during the year, that's not really going to hurt you. It really matters what happens at year end. I cover all that in Green's 2015 Trader Tax Guide. And by the way, just because it's a rollover, I don't think you can count it as another trade for trader tax status, business treatment. That's a different topic than we're covering today. Now, Forex spot traders don't take delivery of the foreign exchange. If you happen to invest in physical foreign currency, that's not Forex. So you can't do, these rules don't apply. The rules are a little different. It's in our guide. You can't do the opt-out election, the capital gains election. Now, Forex tax treatment. By default, Forex transactions start off receiving ordinary gain or loss treatment as dictated in 988. It's summary reporting. It's realized gains and losses, including rollovers. And the good news is it can offset your ordinary income. We discussed that already. Section 988 allows investors and business traders, but not manufacturers, to internally file a contemporaneous capital gains election to opt out of Section 988 into capital gain or loss treatment. You can do that on a good to cancel basis. If you had losses this year and you were in 988, good, maybe, if you have other income to absorb it. And maybe now you want to get into the lower 60/40 rates for the rest of the year. So you send yourself an email after today's session saying, I listened to Bob Green. I want to file the capital gains election on a good to cancel basis for the rest of the year. And you email it to yourself. That serves as an internal contemporaneous election. Now, why do it? One reason to do so is if you need capital gains to use up capital loss carryovers, which otherwise may go wasted for years. If you have capital losses, carryovers left over from securities or futures, and now you're trading Forex, and you want to use up those capital loss carryovers, and your Forex otherwise is ordinary, and you can't offset it with capital loss carryovers, you want to file this capital gains election. Another reason is if you're a Forex trader and you don't have business treatment, you don't have trader tax status, you don't qualify for that. If you have negative taxable income, if all you do is trade, but not enough for business treatment, and you lose 20, 30,000 and you don't have any income to absorb it, and you have a bunch of itemized deductions or a standard deduction, it's all going to be wasted because it's not a net operating loss carryover or carryback. So you want to do that capital gains election. Now, it's great to qualify for Section 1256G and get the lower 60/40 rates. So it's clear in the law that Forex capital gains election on Forex forwards allows a trader to use 1256G treatment with the lower 60/40 rates, providing it's on major currencies that trade on a futures exchange like the CME, and you don't take or make delivery. Now, 1256G was added in the mid-1980s, and there was no trading in spot until 2000, the Commodity Futures Modernization Act, and they came up with these new platforms. So we make a case for treating spot like forwards, but it's beyond today's session. Read about it in Green's 2015 Trader Tax Guide, which is on sale on our website, and you really should get. Deposit losses. So you were trading with your broker. You had gains, you had losses. They gave you a nice P&L report, which is, by the way, what you use. You don't get a 1099. And again, that's in the guide. So that's the tax treatment for the trading gains and losses. But what happens when you're sitting there at your broker, you're with a Parry UK, and they went insolvent, and they maybe go into bankruptcy, and the trustees never recover any of your funds or only half your funds? What do you do with the rest of the loss? People worried about that with PFG Financial and with MFG Global. Now, most of the futures account holders at MF Global were 100% square. They recovered those funds, but not necessarily all the Forex, I don't believe, because the segregation didn't protect them as much. They didn't have, that was a great lesson in how futures account holders have better protection in bankruptcy code priority and process and priority, for who gets paid first versus the Forex holder. So when a broker or a bank fails, there are special tax rules for deducting unrecovered deposit balances in insolvent financial institutions. Patience is required. So many traders, investors, hedge funds, they got sideswiped, MF Global and PFG. Futures and Forex account holders are not afforded government protection like bank account holders with FDIC protection and securities account holders with SIPC protection. Both the SEC and CFTC require brokers and banks to segregate customer funds. Some argue that MF Global disrespected the segregation rules. I mean, yeah, you can buy bonds. No one said Greek bonds, government bonds. Now, theft losses, that's a good tax treatment. And I wonder if people are going to argue about some of that too in some of these cases. Tax treatment is far better when the IRS has to declare that the theft loss treatment applies with application of the Special Revenue Procedure 2009-20, originally enacted to provide tax relief for investors in the Bernie Madoff Ponzi scheme. Theft losses receive ordinary loss treatment plus acceleration of losses on tax returns. They don't wait for the judge and the bankruptcy court to sustain the loss, to finalize it all after all recovery efforts. They let you take the loss, and if there is recovery, then you take in the income later on. Now, if it's not a theft loss, it's a Section 165 loss. That's what applied to MF Global. That was not a theft loss. Section 165 worked like a charm on MF Global. It said, you got to wait for the loss to be sustained. Everybody was jumping the gun. I mean, it took years for the loss to be sustained. And guess what? It wasn't sustained. They recovered for the futures account holders, from my understanding, 100%. They don't want big deductions, the IRS, and then people don't report their income that's recovered later on. You need patience. And plus, investors are stuck choosing between capital loss treatment, which is not great if you have a capital loss carryover, or itemized deduction treatment with a lot of restrictions and haircuts. Now, our clients with trader tax status got the business ordinary loss treatment because they had business trading accounts with MF Global, the Forex traders. So it just requires the patience to wait for it to be sustained. So read about all that on the blog. Now, let's take a break for a second and see how we're doing with questions on the board here. How are we doing with everything, everybody? Is we moving along with the content? Are you following me okay? Just say okay if it's going along okay. Let's do a couple of poll questions real quickly here as well, just to take a little break from the content. These are some good poll questions here. Let's look at the first poll question. Did you incur Forex trading losses? Yes? No? And let me see if I can make this a little bigger. So I guess related to the SMB news, I don't see the full question. So did you incur a big loss right after that shocking announcement? Yes, no, or maybe. And I'll close this poll in just 3 seconds. In 1, 2, 3. And let's share the results. And you should see the results now. So 15% of you said yes, 50% no, and 35% were in trading at the time. Okay. So the next question is do you trade with U.S. or foreign Forex brokers? So you trade with a U.S. broker, or you trade with foreign brokers, or you trade with both. We don't share any results here. We don't show any names. It's anonymous voting. So are you with a U.S. broker, or a foreign broker, or both? And I'll close out this poll in 3. And 1, 2, 3. Share the results. 96% U.S. No one said they do it with foreign. They're probably afraid to say that you do, which I think you're right to be afraid to say it because the CFTC doesn't want that. And some do it with both. Okay, let me hide the results. Go to the next question. Which tax treatment do you use on Forex trades? Do you use Section 988 ordinary gain or loss, or do you use capital gains or losses, or do you use Section 1256G, the lower 60/40 capital gains rates? All right, let's get a little more voting on this one. This one might have been multiple choice, I believe. All right, so let me close this out in 3. 1, 2, 3. Good, we got 50% voting. Share the results. 55% do Section 988, 13% capital gains and loss, and 130 you do 1256G. That's good. And let's go back now to the content. Okay, and you should now see the slides again on the money safety issues. So to make sure you do that, just text in that you see the slides again, because I'm having trouble. So just say yes slides, Y slides. Okay, some of you I see. So someone give me a Y slides in the question area. All right, so we're back on the slides. Money safety issues. So if someone just on the question area could, okay, yes, I see it. Thank you. Money safety issues. Trading Forex off exchange with lightly regulated brokers, sometimes taking the opposite position from you and using extreme leverage in volatile markets, which is not always the case, is a recipe for losses. The FDIC, the government's not going to be a backstop for you. The SIPC is not going to apply. A lot of these brokers don't necessarily have, if they have insurance for deposit losses, they're going to say it's a trading loss. They're going to put the loss on you. So someone's got to lose, either you or the bank or the broker. So, and now we see that this is exactly what happened. And the regulators were warning against that. That's why Dodd-Frank reined in the leverage. They used to be 100 or 200 to 1. They made it 50 to 1 on the majors and 20 to 1 on the minors. Because they were afraid of these types of events that could happen, and they do happen. I mean, that's what happened with the financial crisis. It's not about the everyday. It's about the outlier events. Now, these banks, these Forex brokers, they're not systemic risk institutions. The government's not going to backstop them. So the media continues to report horror stories about Forex brokers jamming customers with huge losses and closing out positions during the SNB shock to the markets. See recent media about Saxo Bank charging customers with large losses, not executing stop loss orders, and adjusting closing prices later on. That was an excellent article. It just came out. We don't have to open it right now. You can, if you get this recording, which we're going to have for sale after the event, you're going to have the PowerPoint in the recording. You click on these links to go to all those articles. Some of the articles may require subscription, like Wall Street Journal or New York Times. But I couldn't believe it. They said it was the Ayn Rand approach, the personal responsibility approach. And I have some more about this later. So they put all the losses on their customers. Other brokers, they may offer private insurance, but they really haven't lost the deposits yet, except for really Alpara UK. But let's see still what happens. Some have been saved by white knights. That's different from trading losses. The insurance doesn't apply. And again, the bank may say it's a trading loss. When you can't call the broker, when they don't execute your order, where there is no market price, where the stop loss was missed a long time ago, you're really at the mercy of the markets. Now, some of these platforms have been accused by the Justice Department yesterday and today of canceling trades that weren't in their favor. I mean, did they really reference trades in the interbank market? Some of them don't clear directly in the interbank market. And by the way, one of the requirements of 1256G, if you want those lower 60/40 rates, you need to be directly in the interbank market. If you're with a Forex broker that is not in the interbank market, is making a house on their own, a lightly regulated institution after Dodd-Frank, regulated by the CFTC and NFA, with net capital requirements, which are not that high. If it fails, what do you do? Anyway, let me come back to this other point. Some brokers, let's go to the next screen, excuse me. Now, there's little customer protection for Forex. This was another good article from Futures Magazine, Cover Your Assets. This is a quote from the article. Without a net, the futures account segregation infrastructure simply doesn't exist for Forex traders. It does exist a little bit more post-Dodd-Frank. Because foreign exchange is an OTC market, not a designated contract market, the CFTC does not regulate the foreign exchange dealers except in instances of fraud and in those cases where Forex dealers are found to be trading off exchange illegal futures or contracts. Anyway, it's beefed up a bit with Dodd-Frank, but not as much as you would think. Read these alerts from the CFTC. If we have time, we'll look at some of these links after the event. I think we're not going to have enough time. The CFTC warnings for Forex are pretty big, and for Forex brokers. Now, one of the Forex brokers, Forex.com, they were showing off on CNBC that they didn't have the trouble that FXCM had, and they have a disclosure page, and I read that disclosure page. They talk about that they're a public company, that they have a good balance sheet, that they have the light segregation rules. but not much else. They didn't talk about some of their infractions with the CFTC for pricing and other problems that they had. So it's not as safe as you might think. Now, there's another good link here, the pros and cons of trading Forex in overseas accounts. This is Investopedia. I read the page. The woman wrote about the new regulations under Dodd-Frank, about the rules that we've covered. But there are serious errors in that article. She said that on these offshore accounts, you don't pay taxes until you take the money out of the accounts. No wonder we had so many people with that misconception when they came to us about it. We said, no, there is no deferral offshore. You're taxed on your worldwide accounts on the underlying income, whether you take the money out of the account or not, whether the account's in the US or offshore. Plus, you have all the foreign bank account reports. And this article probably led to so many people going offshore, violating the CFTC rules, violating the NFA hedging rule, thinking they were getting tax deferral and they didn't. And now your foreign broker failed because you had 100, 200 to 1, or they have problems. They socked you with big losses like Saxo Bank. That was one of them that people went to. There was that Finn Bank in Finland who could care less about the CFTC rules, even after we contacted them. And now your chickens have come home to roost. You're going to be in trouble with the CFTC. You probably have a lot of red tape and trouble with the IRS, and maybe you didn't report everything right. Maybe you didn't report the income you had to report. Maybe you didn't report the account. And now your money's gone. And what are you going to do? Get involved with a lawsuit offshore? They're going to laugh you out of Denmark or Finland. So the chickens have come home to roost. Now, this is a good article. This SN Bomb, reactions from 75 Forex brokers from Forex Crunch. They went through all 75 different brokers and how everybody reacted differently. What does it tell you about all those different reactions? It tells you that the rules are not clear, that the regulations are all over the map in different countries, and that companies are taking different actions. Some for brand, some for marketing, some for legal, tax, and more. So like Warren Buffett always said, when the tide goes out, you see the emperor has no clothes. Now, just today, the Justice Department is seeking felony pleas from big banks in foreign currency inquiry. They already said that the interbank market is rigged, that there was a boys' club or a girls' club, that all these guys were in these chat rooms and message boards, and they were playing around with the prices. They would see a big order coming from a hedge fund, and they would front run it. They would change the prices. They were playing games. Now it turns out that the feds are saying that they also cook the books on these platforms. It was the Deutsche Banks, the Citibanks, and the others of the world that created these platforms for these smaller online brokers to use. These smaller online brokers are kind of clients of these big banks. They have their own book. They're like a little mini, house. And then they write contracts on the opposite side in some cases. In other sides, they aggregate, they net the long and short, and then they go to Citi or Deutsche in the interbank market to square their books. The IRS may say no to 60/40. There's all sorts of, ever since Dodd-Frank came out, there's been one bust after the other by the NFA saying there was price slippage. Why is it that the price always seems to slip in favor of the broker? Now, CNBC had a nice piece on the Forex leverage showing how it works and how dangerous it is. Exactly how it can work and cause large losses when it goes against you. Now, the reactions are varying among the brokers. Some Forex brokers like Saxo adjusted closing prices after the fact to pin trading losses on customers. They are trying to collect losses in excess of deposits. The tough luck, personal responsibility, Ayn Rand byline. That's a bunch of BS in my opinion. Is this to save the bank at the expense of the customer? It shows you. What does Saxo Bank, a Danish bank, give a darn about U.S. customers, small potato and their retail customers? And they don't, they don't like the IRS with all this fat cast stuff and all this reporting. What do they care about the U.S.? They think the U.S. is out of control. So what are you going to go to Denmark and sue them now? So we warned you against it. And now you got socked it to you. And what are you going to do about it? That's, I think, outrageous of Saxo Bank. That you had a stop loss order, you had a order in to get out of the position. For them to put the whole loss on you is ridiculous. Now, what relief do Americans have in foreign countries? And lawsuits will be expensive. And you know the way lawsuits work. When you're in the wrong country or the wrong state, they sock it to you. That's the reality. So don't turn to and so what are you going to do? Turn to the CFTC and say, hey, first I violated your rules and I went offshore after Dodd-Frank was enacted October 2010. And you said only go with a U.S. registered broker offering no more than 50 to 1. And I just turned my nose at you and I got 400 to 1 offshore or 200 to 1. And now I want your help. They'll laugh you out of town and maybe sock it to you with penalties. Now, most of their rules were intended to rein in the intermediaries, but it applies to you too. Now, other Forex brokers honored the customer stop loss orders and did not seek to pin all the losses on the customers. Some failed, and others got a white knight savior. Now, the ones that failed, they might have failed like Alpara UK, but maybe not some of their other country branches. They usually try to have a separate company to ring fence losses and to register with the brokers in different countries like FXEM UK versus FXEM US. Now, so some Forex brokers are not pinning it on you. In the case of FXEM, they didn't try to pin it all on you, and they got a white knight. It was pretty tenuous there for a whole day or half a day, and it could have really socked the markets with much, more direst news. But luckily, there was a white knight. But all this stuff the dust hasn't settled. Now, there are quite a few brokers. This is from Forex Crunch. There are quite a few brokers that suffered losses, several others that have Swiss trading suspended, and many saying business, it's business as usual. I doubt that. And then Oander and Dukascopy stand out by forgiving negative equity. Now, you have account agreements. This reminds me of the prop trading space. There are account agreements in writing. And sometimes firms, the fine print may say they can go after you, but for their brand and marketing, and they don't want to be toast, they don't go after you because their salespeople said they wouldn't go after you and there was confusion about it. That's all well and good as long as management is in their role. But if they go insolvent and a trustee gets involved, that trustee is going to execute every dime of recovery that's in the account holder agreements. So don't rest on your laurels of what some sales guy tells you. Look closely at the account holder agreements. Now, I want to see how the CFTC and NFA react in the U.S. and the foreign regulators react internationally. And will there be lawsuits and class action lawsuits? Let's see. What are the lessons learned? Forex trading generally involves extreme leverage, and that's like trying to catch a tiger by the tail during volatile market events. Online Forex brokerage platforms may not even go direct into the markets, and you are trading against the house, which may be weak and unable to withstand extreme losses. Someone has to pay, either the customer or the broker. Now, there are other options. That's why there are exchanges. It's just like with the derivatives when AIG failed. They were private derivatives. There was like a interbank market of sorts of derivatives, credit default swaps, and everybody writing contracts. Half the stuff was never signed. And when the music stops and there's a huge lack of confidence and a big loss, the whole thing fails. The house of cards crumbles. And that's why Dodd-Frank wanted derivatives to clear on exchanges. They still let you write private contracts, but they wanted to clear on exchanges. What do exchanges do? Exchanges require margin. They require registered counterparties who are regulated, who have the balance sheets to make good on their commitments. Regulators are your friend. Exchanges are your friend. Leverage rules and margin are your friend, unless you want to be super reckless and put your family assets at great risk. So now some larger securities and futures brokers, they also offer Forex trading, and that's another option to consider. Your interactive brokers, TradeStation. It's not just the smaller boutique online trading firms. Some of them have private insurance, but again, that's for the lost deposits, not for trading losses. Now, some of this stuff in these concepts in these areas are interrelated. So let's get into this next area. CFTC and NFA FX rules, Forex rules. Retail customers need to trade Forex with a U.S. registered broker or bank offering no more than 50-to-1 leverage on major currencies and 20-to-1 on minors. U.S. futures have nominal leverage up to 30-to-1. Now, I've had a lot of people over the last few years come to me on a consultation and say, Bob, if I have to use 50-to-1 leverage, my trading business, I'm out of business. My program doesn't work. I need 100 or 200-to-1 leverage in normal events. I mean, not everybody has a trading program ready for the Swiss bombshell. I mean, it's the normal events. And they needed also the hedging. They needed spread betting. They didn't want to use LIFO. And they just didn't feel that they could do a business. And they wanted to have customers. And I said, why would you be in contravention of the CFTC rules for both retail customers and introducing brokers and CTAs? Why would you do all that? And do that for customers who could sue you on all this, take all that risk. So the CFTC allows retail off-exchange Forex accounts to have up to 50-to-1 leverage on the majors. And then at any point, they could change that. That's not carved in stone. They could tomorrow say it's 30-to-1 or 20-to-1. Change all these. It's up to that maximum. Just like brokers, when there are huge losses in the oil energies or oil markets or gold or whatever, it's very typical that the exchanges will raise the margin requirements. Sometimes it's like closing the barn door after the animals are out, but it's not to have continued problems. Now, eligible contract participants, ECP, are not subject to these retail rules. They can still go offshore, but you got to have like 5 or 10 million. So your bigger players can still get the big leverage offshore. Remember, most consumer protection rules are always for the smaller players. They think that the smart, sophisticated, rich people are able to take and withstand more risk. It's a mistake to hunt for higher leverage offered at unregistered Forex brokers and banks located in foreign countries. I've said that for years. Read the blog. It contravenes CFTC and NFA rules. Now, if you're a dual resident living abroad, it can be okay. So if you live in Singapore, you're an American citizen, but you're also a Singapore national and you live in Singapore and you still file a U.S. tax return because you're still a legal resident, you can still do it because you live abroad. But if you live in the U.S. and try to use a phony address abroad, I don't think you should. Don't bother setting up an offshore company, as that doesn't skirt these CFTC rules and it makes tax filings a mess with no tax advantages. We've covered this on the blog. I've confirmed this with the CFTC enforcement attorneys. They refer to it as a dummy corporation. There's no deferral and there's a whole heap of red tape. NFA has rules too. Its most famous one is the hedging rule. They want you to use LIFO. They don't want spread betting that you can do in the UK. And a lot of traders have a big problem with that. So, where are we? Forex trading has some nice tax treatment, ordinary gain or loss, or lower 60/40 on the majors, but you got to be in the interbank market, and now we're seeing that maybe that's not always the case. So it's a little tax uncertainty. It's risky. You're betting with the house, against the house, a lot. Even with 50-to-1 leverage, there's still a lot of leverage. So a lot of people are saying now, listen, I'm not that happy with what went down. I don't like the foreign brokers. I'm not that happy with the U.S. brokers, the ones that are showing off with their balance sheet. I don't think they're as strong as they say they are. Bob said, if there's a major event, if you got 50-to-1 leverage, someone is not going to have a seat. And is it going to be you? And if it's not you, it's the bank. And how good is that if the bank fails? You might have made money, but all the other customers of the bank lost, and then your deposit disappears. That's what happened with MF Global. So you may want some other choice. So are you sour on trading with Forex brokers? Consider trading FX futures on futures exchanges. That might be safer. Or, and when I mention this word Nadex, a lot of you may say, what? Bob's mentioning Nadex. We haven't been that crazy about Nadex because of how they've been handling the tax treatment. We have some differences with them over that. We've written about it on the blog. Binary options have a bad rap, but Nadex is a designated contract market. It is regulated by the CFTC. And my partner, Darren Neuschwander, has been telling me, Bob, I think things are moving to Nadex. And I'm going to tell you why in just a couple of minutes. Because they have exposure to currency. You can also buy, including like one that settles in 5 minutes. And also there's currency ETFs, a whole assortment of currency ETFs that you can trade. So let's cover each of these items first. See how we're doing on timing. At 5:08, we're going to go to about 5:30. We're going to go at least 15 minutes late here. So stay with me here. Let's see how we're doing on the board. How are we doing with the content? Is it good so far? Give me some feedback on the question area. And let's see how we're doing with attendees. Yeah, we got a good number of you on the call. That's good. All right, let's get back to the content. You can trade FX futures contracts, the CME group. That's the CME, the CBOE, the NYMEX, COMEX. I mean, all those exchanges, they offer FX products, futures, options, micros. You can click on the full product list, and there's a wonderful primer on their site explaining how the futures are different from Forex and swaps and everything. They do a nice job. Now, margin varies by product on the CME. Generally, we've always heard that some of the majors are around 30-to-1. And when the CFTC went to 50-to-1 for Forex, we said in the blog, hey, that's not that much different from the CME. So it's not like you're getting much more leverage in Forex anymore. Now, it turns out that there is much higher leverage on foreign futures on the CME, and I'll show you that in a second. Now, regulated futures contracts, RFCs, listed on U.S. exchanges qualify for Section 1256 lower 60/40 tax rates, and they are marked to market for tax purposes. You're guaranteed to get lower 60/40 rates with FX futures, whereas with Forex, it's a little uncertain. We make a strong case for it if you're in the interbank market, but if you're betting with a house that's not in the interbank market, and it turns out they weren't at all in the interbank market now that the tide has gone out and some of the regulators take a closer look, and that they didn't do what they told us they did a year ago, your 60/40 treatment could be at risk. We have to see, are they in the interbank market or not? And we've been clear on that throughout. Go back to all our content on that. We're not trying to scare you on 60/40 for the past. We're just reiterating the point. But the point is, and as we've always said, if you can get the same leverage and you get 60-40, it's something to consider because you got the exchange protection of making sure the counterparties deliver. You have the liquidity. There's a lot of benefits. And some of the articles I have in this PowerPoint talk about that. Look at what just came out of the news from Interactive Brokers. Click on this link and you'll see this was a press release, really, or a page of the IB site. Futures, not spot Forex, was the big culprit. One of the surprising reveals from Interactive Brokers CEO was that of the $120 million negative balance losses, 75% of it was attributed to Forex futures, the Euro Swiss. So Petify pinned this on margin requirements actually being lower on the Swiss franc future. That means higher leverage. So what he pointed out is that there was a 1% margin requirement on the CME for these FX futures versus 40-1, which he allowed at IB. Even though it can go up to 50-1, I guess they only allowed 40-1. It's very interesting that Forex is 9% of IB's commission business now. It's funny how they say that because technically there are no commissions and it's really the pips. All right, there's a whole other world, something new, Nadex binary options. That's a derivative exchange, a North American derivative exchange. It offers retail traders an online trading platform for limited risk. That's the key. Limited risk. Turned out there wasn't limited risk with Forex. You made a trade, it went against you, you couldn't get out, and the broker socked it to you. Not all, but some did. It wasn't limited risk. All of you traders know, cardinal rule. If you're short a stock, your losses are unlimited. You know when there's limited risk and when there's not. You know that better than me. Whether you're trading futures, options, Forex, whatever you're trading. Binary options are limited risk. They offer exposure to stock indexes, commodities, Forex, and financial events. You can make a speculation holder through expiration for all or nothing payoff, which some pundits akin to making a bet. Binary options, by the way, have a bad rap. These private binary options dealers, they've been busted by the regulators as being fraudulent, not legal exchanges. Stay clear of all that. I am not blessing binary options. I'm just talking about Nadex here. And it's kind of a term, binary options. We don't think they are options. That's why we disagree with the tax treatment that they put out. So you can trade the contract before expiration. So there's liquidity. And as I say now, Nadex offers exposure to the currency markets with binary options. They recently offered a 5-minute binary option contract on some major currencies, which is similar to Forex trading. Here's the key. Nadex binary option accounts are cash accounts with no margin allowed. By the way, that's one reason we don't think they get 1256, which gives traders the comfort of knowing their main gain or loss per transaction. So you know. That's one of the reasons why you might be looking for an alternative to the Forex brokers. It gives you the comfort of knowing the maximum, I had a little duplication here, maximum gain or loss per transaction. Compare that to the wild gyrations in the Forex market. So the tax treatment for Nadex binary options is unclear in the sense that we did an exhaustive research product. We think it swaps an ordinary gain or loss. Nadex has in the past thought it was 1256. And we're trying to reconcile all this. So for that reason, we still say it's a little unclear. There's another choice. So by the way, if you trade Nadex and you get a 1089 for 1256 treatment, our content says it's ordinary, especially if it's in currencies. So check with us on it so you do the right thing on your tax return. If you trade Nadex, you need to check with us. Now, currency ETFs. There's a top 10 list, a lot of currency ETFs. Some are registered investment companies, some are publicly traded partnerships. When you sell them, they're taxed like securities. But some are publicly traded trusts, which are disregarded entities. So you got to then look to the underlying treatment, whether it's Section 988 or 1256 or otherwise. Most of you know we have extensive content on ETF tax treatment in all of our content. So that's really the content now. We're going to go back to questions on the board. We got a 516 now. We're doing good here. So get your questions up on the board. They're going to be good for everyone, so we're going to leave the recording still on. And let's go back to a few more poll questions before we do the questions on the board. Next question, poll question, is your Forex broker facing insolvency or those types of problems? Have you gotten a whiff of news about that? Yes, no, or not sure? Not sure means you really don't know. You really have your doubts. You're wondering, or you know for a fact that they are. Try to get your money out, because if you have to wait for a deposit loss, Section 165, you're going to have to wait until the loss is sustained. They could tie it up in court for years. If you have a big balance, that's really important to you. Now, I remember also with Gain Capital, I think they said in their disclosure that they put the deposits with different banks. If they put your deposit with a bank, it might have FDIC protection. So you want to read what all these brokers are doing. I'm not just putting them all into one bucket and saying it's bad news. What I'm saying is you need to get a hold of the situation, see where you stand, and don't, make assumptions. Okay, let's close this poll now. 4% think their broker is facing insolvency. 72% no. 24% of you are not sure. Okay, I shared the results. Let me look at the next question. Is your money safe with your Forex broker? Do you feel that your money is safe? Yes, they have good private insurance or other things. This is beyond when I wrote these questions days ago, because I worked on this PowerPoint today. Do you feel it's safe for a number of reasons that we talked about? Their pricing mechanism, how they work, what their attitude is towards you when the music stops. So do you feel it's safe, just in general? Do you feel comfortable with your Forex broker? All right, let's close out the voting in 3. Interesting results here. Look at these results. 24% of you think it's safe. 62% of you are not sure. And 13% of you are worried. That's some pretty serious worry. All right, let's hide the results. And let's look at the last question. Has your broker, Forex broker, requested you to pay for losses over your deposit amount? So you had a big loss, and they said, hey, you got to pay us more margin. You got to cover these losses. So yes, no, or not sure, and we'll close this out, and then we'll get to your questions. All right, let's close this one out and share the results. Only 3% of you had to fork over more money. 94% no, 3% not sure. That's great. Most of you on today's session, I think, were working with U.S. brokers, and I think things were handled pretty well. And hopefully things have died down and gotten a little better. Let's hide the results. And let's go back to our website now, and let's go back to the home page. And let's go to the Contact Us page. So by the way, on the home page here, you can go into the Trader Tax Center, and you can click on Tax Treatment, and you can click on Forex Tax Treatment on the different. You could read more about various things, and there's a lot of related blogs and related events. And you can also, I recommend, get the Green's 2015 Trader Tax Guide, because That's where we go into it all and much more in depth. So I really recommend this guide for you. And if you'd like some help with your Forex reporting for 2014, I recommend our tax compliance service. It's our main professional service under professional services. Some people that have a huge loss in Forex, they're very nervous about IRS questions. There are sometimes if the loss is over 50,000, you have to file a tax shelter form, and it's more of a red flag. So clients who have losses, they want us to sign the return because they want the refunds without IRS problems. And on the flip side, the clients who have large gains, they want us to sign the return because they want the lower 60/40 tax rate. So we have a lot of Forex trading clients. If you're not sure about how to handle things, you want to talk to me first about it, do a consultation with me. Hopefully you don't have to do your own accounting on Forex and you can rely on the broker's reporting. So click the Contact Us page, and you can click to schedule a session, not a consultation, a session with Darren Neuschwander. He can give you a quote for your tax preparation cost. Forex doesn't have to be that complex because we do rely on the report from the broker, and it is summary reporting. It's not like all that detailed Form 8949 that we have for securities. So let's look at your questions on the board. And please also send us your feedback. Oh, now I see a little bit better how to expand this. Good. All right, I'm expanding the questions here. I'm looking right up top now. The recording package, by the way, that's for all the recordings from last year. The recordings this year, you get each one at a time. I think they're like $7.95 each. I think that's a great deal. Put a lot of work into these webinars, and now we're going to first produce a recording tonight and tomorrow as well. So we appreciate that you do chip in a little bit. $7.95 is a good chip in price, and spread the news and get your friends to look at our content too. Let's see here. I'm trying to see if I can see these full questions. A lot of people are talking about wanting to protect themselves trading Forex for the first time. They weren't sure really how things were taxed. By the way, when you get this recording, you're also going to get the PowerPoint with all the links. You'll have a download after you make the purchase, and it'll be the recording and the PowerPoint in PDF form. So you can have both files. Do we need trader tax status in order to elect 1256G? No, that's the beauty. Trader tax status gives you the business expense treatment. A lot of Forex traders don't have huge expenses because they have these platforms from the brokers giving a lot of the tools. And I mean, you might have expenses if you take seminars, but things like that. But 1256G, anyone, whether investor or business trader, can file the capital gains election. Just make sure your broker is truly in the interbank market. And you may want to check in with us about that this year for sure. 1256 losses, you can do a 1256 loss carryback election. If you don't do that loss carryback election, Michael B., then it's just a capital loss carryover. All right. Do I have to elect 60/40 tax treatment for futures as well as Forex? No. When you trade regulated futures contracts, including FX futures, it's automatically 1256. But 1256G stands for foreign currency contracts, and you start in 988 and you have to elect the capital gains election, which can take you all the way into 1256G. Forex OTC options were barred from 1256G. You got to read the whole backstory on this. There's a lot more to all this content. Get the guide, the Green's 2015 Trader Tax Guide. It's all in the guide. I put a tremendous amount of work into the guide this year, as I do each year. They're professionally edited, professionally produced. We really hope that you buy them because the content is very valuable. Sometimes the broker takes the money and leaves town. Wow, yeah, that's a problem, but that's a theft loss. Then hopefully the IRS will allow us to apply the theft ruling like they did with PFG and the Ponzi ruling. Theft is theft. you should get better tax treatment from the IRS because the deposit loss treatment isn't great. It is not great. You would think someone who's subject to a Ponzi scheme should get better treatment. PFG got the treatment because the Commodity Coalition, who we work closely with, did a great job of petitioning the IRS for that treatment. Read all about it on our blog. Jen T. When do you need to make the contemporaneous internal election for the opt-out election? You make it right now, today. You say, I just took this webinar. I want to do the capital gains election on a good to cancel basis for the rest of the year. And you email yourself. That's internal in your own books and records. So if you didn't do it yet this year, then you have ordinary gain or loss treatment. That might be good if you have ordinary gains to offset losses with, if you have ordinary losses. But if you have gains, you might have preferred the lower 60/40 tax rates. We once had a client who worked with one of the biggest accounting firms, made $3 million a year trading forwards. He was a major player in the interbank market. They never told him about the capital gains election. He paid ordinary tax rates. He was really upset when we told him we could have saved him 12% of $3 million a year for 5 years. And we fixed it with him going forward. Is it my understanding that your firm will do the entity taxes if I use an offshore account as long as the P&L reporting is in US dollars? Can you confirm? Listen, if you have an offshore entity, you got a lot of red tape ahead of you. Yeah, we'll be your firm. We'll handle things. It's a big job. It's a big problem. I have to check in with our international tax expert to see if we want to do it. It's not guaranteed that we'll do it because there's a lot of red tape, a lot of problems. We really hope you try to avoid those things because there's no tax deferral. Sometimes people do have an offshore entity to get access to an offshore broker. They're going to do everything, report everything, do everything properly. They just need it for offshore access. But so many other times people do it for the wrong reasons. We told you not to do it. You see left and right, people are getting busted for these offshore accounts now and offshore corporations. All the banks are turning them in. HSBC, they just opened up. They made a settlement a few years ago. They just reopened it. If your bank makes a settlement for billions of dollars or hundreds of millions of dollars with the government, whether it be the various departments of the government, Treasury or otherwise, or the Attorney General, Department of Justice, if they lied about the facts of that settlement, they can be reopened. You can be the cannon fodder that comes out of it. So, okay, sometimes we're accused of being the little old man of the space for being a little conservative. Chickens come home to roost. It pays to be conservative. Look at what's going down now. All right, next question. None of the U.S. brokers are good either, Nancy says. Well, Claudia, Citibank uses Saxo Bank. Yeah, maybe they do. I'm not saying Saxo did anything wrong for sure, but it just astounded me that they laid it off on the customer. Sure, the customer made the trade, but if you didn't answer the phone to get him out of the trade, if you didn't execute the stop loss order, is it fair to blame it all? I mean, there are arbitration decisions with brokers all the time. I saw today the Sadis and Goldberg won $2 million with a broker arbitration with an email notice I got from them. We all know about unsavory practices of brokers. They don't always have their customers' best interests at heart. I don't know exactly every iteration of everything that went down, okay? We're a tax firm. We're talking about the money safety issues. I'm not studying this every day. You guys are in the market. You've heard the war stories. Bring them to us. Let us know. But bottom line, you come to us with your tax file. You say, these are my losses. This is my story. We interview you, and we try to figure out the best proper tax treatment that's correct, legal, has substantial authority, and is in your best interest. That's the bottom line. Everybody's situation is a little different. Is Think or Swim a good platform to trade Forex? Well, when I spoke with Darren Neuschwander before, we were saying, well, one thing we don't like about the Forex brokers is the price slippage. Are they really in the interbank market? What is the interbank market? The Department of Justice said that they were rigging the prices. I mean, what is the price? At least with an exchange, there's a price. And I said, Darren, what is the price on Nadex? Where are the prices coming from? And he said he went to a webinar and they were referencing prices on Thinkorswim or TD Ameritrade, and it was working out dollar for dollar. But that whole issue concerns me. Like, what is the price? If the broker offers a rollover trade, this is from Tim, should we include unrealized gains or losses? Yeah, it's not unrealized gain or loss. When there's a rollover, what happens is the brokers hit you with rollover interest. It's not really interest expense or interest income. It's part of trading gain or loss. But they don't pick up the flip side of the appreciation or depreciation, and they should. And for that reason, most of their reports are wrong, and you need to make that adjustment at year end when it counts the most for what's open at the time. There's some more complex tax research on some of those issues. It depends on the type of rollover trade it is. That's what I just said doesn't apply in all cases. We will have a new blog on that soon. Our tax attorney's done research on it. I don't have it on my tip of my tongue right now to share with you. But in some cases, it really is interest on the rollovers. In many cases, it's not. But the rollover is a realized transaction. That I can say with assurance. Okay, we're going to get through more questions. A lot of you have multiple questions. You're going to want to come to us with them. One of the attractions about spot FX, the ability to adjust the size of the contracts. All right, yeah, there's lots of pros and cons to all these different types of instruments. Thanks. I see a lot of good feedback here. Is trading Forex a scam? No, it's not a scam. There are a lot of scams out there. I remember a CPA from Texas came to me in a consultation, said, I got a Mexican bank and they guarantee 5% a month and they're trading Forex. I said, well, are you investing in a fund? No. Do you have an account in your name? No. Well, what did you do with your money? I turned it over to somebody. I said, you turned over your money. It's not in your name and you have no shares of a fund. And it's not debt. Well, you just gave away your money. He says, I'm not worried about it. They keep sending me back 5% a month. I said, why don't you ask for all your money back and see what happens? Because then you may not get your money back, because that's how Ponzi schemes work. And I was really worried that this so-called Mexican bank, which I read about, I'm not naming names, was implicated with I don't want to go further, on illegal business practices. What was he really financing? You know, someone tells me I'm going to something in Panama, I'm going to Cyprus, I'm going here. Are you crazy? You're going to the darkest areas offshore, to known tax havens with known scam operators with no money protection, and you're falling for a bunch of scam promises and Ponzi schemes. So read that CFTC alert. I think it's really right on. CFTC is your friend. You're financing them with your taxes. You may as well let them work for you. Call them up, get some good advice from them. Don't be aggressive. If you tell me, Bob, I can only make money with 400-to-1 leverage and betting the family farm, that's sad to hear. That's sad to hear. Now, there are some great Forex funds. I mean, listen, large hedge funds, they may have a lot of leverage, but they don't put all their money up. They have a lot of their money sitting in cash. They know how to manage risk. They have very sophisticated systems. Some of them got burned with that Swiss move. All right, do I have to elect? Okay, some of these questions are redundant. 1 second. I think about reputable brokers. Let me read a few more here. If I have summary reporting for Forex, calculate gain or loss. Yeah, you can just If you have a 1099 INT, it might really be interest, but otherwise everything ends up being Forex trading gain or loss, and your Forex reports are good enough. I explain all that in the guides. I had a loss on CME Swiss. Yeah, remember, IB said that they had that big loss because there was 100-1 on the CME. By the way, if you trade foreign futures exchange, you probably don't get 1256. Read our blog on that. Okay, I think we got to a lot of the questions. Puerto Rico, that's in our blog. And by the way, if you want to learn about Puerto Rico to get 0 tax rates on capital gains, get that webinar recording package from last year. That's $59.95. You get all the recordings from last year. It's a great value. So let's go back to the website. We want to hear from you guys. Thank you very much, everyone, for attending. Bottom line, make an assessment, pros and cons of what you're doing. Don't bury these stuff under the rug. Be honest with yourself about the risk, where you stand. Get with us for your 014 taxes. Talk to us about your 015 situation. If you had a big loss, where you stand, help with the elections, 60-40, all of that, to be sure of your tax treatment, no matter what you trade. If you need an entity, we can help you with that as well. And we'd like to hear from you soon. And please spread the word on our content. Go into those Forex rooms. Send people to our content. We really appreciate it. We are your advocate. I think we have a good balance of being clever, smart, trustworthy, using good judgment, being conservative when you need to be conservative, being aggressive when you can afford to be aggressive. And we've been doing it for over 30 years with great success and respect from the IRS on the chief counsel to 988, on the chief counsel to 1256G, on the chief counsel working on the binary options, on 475. All these issues we deal with the top echelons of the IRS. Our content is well vetted. So thank you, everyone, for coming, and we look forward to seeing you on our next event, which happens to be tomorrow.